Tesla founder and CEO Elon Musk just disclosed the purchase of over 73 million shares of Twitter.
Elon Musk now has a major ownership stake in Twitter. How did this happen?
Elon Musk, right? The world's richest man and CEO of both Tesla and SpaceX, buying 9.2% of Twitter.
I'm going to short it. Welcome back to Stock Tricks with Nick. In today's video, I'll be walking through a full breakdown of my short trade in Twitter, including all the edges that stack the probability in my favor, along with the trade execution. We'll cover the entry, the initial stop loss, and how I managed the trade once I was in it. And finally, if you enjoyed the video, please take 1 second to hit the like button and subscribe to my channel. I make weekly watchlist videos along with other trading content. Let's jump into the charts and dissect this trade. We're going to be starting with the daily chart of Twitter because honestly, after October 27th here, when we gapped down on heavy volume after earnings, I hadn't looked at a Twitter chart since Elon posted that he took a position. So I need to familiarize myself with the chart as well. And you can see it had been in a major downtrend. It fell from 73.34 down to 31.3 on February 24th, put in a low there. That's about a 57% decline, and it was below all the key moving averages. So at this point, I'm not looking to trade this long for sure. This could have been a nice short. I never traded it short in this area, but we put in that low on February 24th. We start to put in higher lows on March 8th and March 14th. We break to the upside, and then we consolidate a little bit before Elon's news on April 4th. While we're on the daily chart, I wanted to point out the massive amount of volume that came into the stock on this day. Nearly 270 million shares traded. That's the most this year. And it's the most in the last 5 years. So that is a giant change in character. One thing I like to do, and I learned this from TraderLine, is you draw a line at the close of that giant volume day, which was, let's see here, $49.97, right around $50. So this blue line here is right at $49.97. That's called high volume close. That is a potential entry point and a potential area of support that we want to see. If the stock comes in the next day, we want to see that hold as support, and it's a potential entry point if we gap down and then come through that area. So blue line dictates that close on the highest volume day. We'll be covering the next couple steps alongside the S&P 500 so we can see how the market conditions also interact with Twitter's. So up on the right here is the S&P 500, SPY. Just wanted to get a general sense of what the market's doing alongside Twitter. So we did bottom on the 24th, same with Twitter. Had a really nice rally up back above all the key moving averages, while Twitter did not get back above the 200-day simple moving average. But this ran, let's see here, from the low to the high here, ran 12.5%, and most recently ran about 11% in 11 or 12 trading days here. So the market got extended, and it had since pulled back. And then on this green bar, that is when Elon announced his position and when Twitter got that giant bump. So the day that Twitter was pushing higher, the market was also performing well. It closed at the high of the day, put in higher highs, higher lows, never tested that rising 10-day EMA. So all good things there. Just did so on slightly lighter volume. So a little bit less credibility with that move. Maybe the pullback isn't over. That's what you're thinking in that day. So now I want to be walking through kind of the next couple steps of why I was thinking of shorting the trade going into when I did. So second day, we gap up on Twitter. We gap up let me measure this, 7.9%, call it 8%. And this is above the 200-day simple moving average. That's great strength, but because I didn't take a position long on the 4th, I'm not chasing it at 7 or 8% higher this next day, especially when the market has this type of day where it rallies a little bit, breaks over the previous day's high, but can't hold it, and pulls back, breaks under the low, and closes under the 10-day EMA. So while Twitter has gapped up, there's a lot of stocks performing weaker because the S&P 500 actually gapped down and then pushed lower after a quick test of the previous highs. So on this day, market breadth is poor. The general market is acting poor, and you can see that's also kind of contributing to the selling pressure in Twitter, bringing this back from the high of, let's see here, the high was 54.57, and we closed that day at 50.98. So about 2% above our high volume close here, but back under the 200-day simple moving average. So that's the first kind of step where I'm thinking, okay, if this was really, really strong, it would have held the 200-day simple moving average. That would have been a changing character, first time breaking and holding over that area. So we don't get that. That's a little bit of a sign of weakness, but also the market itself is acting weak on that day. Next day, on the 6th here, we gap down on Twitter. We open up right on 50.04. So that's a potential area to go long. I did not take that trade long because looking at the market action also gapped down, and thinking probability wise, even if this is the strongest stock in the market, which it really acted like it on the day, the probability is not in your favor. Market breadth was weak. We gapped down and we really didn't get any traction in the general market. So gap down in the market, closed back under the 200-day, back under the 20-day EMA, bad market breadth, very poor action in the general market. With Twitter, it opened at that area, tried to push higher. Again, second failure at the 200-day simple moving average. We broke above it, but we didn't have the buying pressure to hold that area, in part because the general market is not responding the way we want it to. So that is the second day post our high volume close. Again, that's that blue line, 49.97, right around $50 there. So that's the second day after. And now I'm thinking, okay, the market is acting poorly. For some reason, we are not holding the 200-day simple moving average. There's not enough buying support on Twitter to hold that area if the market breadth is weak. So coming into the day, just on a general basis, not even thinking Twitter as a potential short, I'm coming into the day with a short bias. This market is not acting super well. We just got a distribution day, so a higher volume than the previous day, and we're down more than 0.2%. That is usually a really bad sign. We also saw very high volatility on the previous couple days, and we're in a pullback. So coming into the day, I have a short bias. I'm thinking, what can I short? What's going to set up as much probability on my side as possible before I take the trade? And I find this trade with Twitter. So next we're going to be jumping into the intraday charts of both the S&P 500 and Twitter to get a sense of my entry points, the edges, and where I was, how I managed the trade. Now we're looking at the intraday charts of both Twitter and the E-mini S&P 500 futures. I'm on the West Coast, so we start at 6:30 here. I know it's 3 hours different for the East Coast, but I'm just gonna keep it 6:30 because that's what's gonna show up on the chart here. So looking at this, Twitter, we actually gap up, and the first couple minutes we're pressing higher, up around 2.5% from the low of the day there. So at this point, I don't want to short a strong stock. I want to short a weak stock that's rolling over. So no interest in shorting while it's running up. I'm also seeing the E-mini futures run higher. I'm like, okay, maybe we're finding support, pushing higher for the day. Maybe the market's oversold and we need a bounce day. And then we get this kind of candle on the E-mini futures at 6:43, where it tries to press higher and then immediately reverses lower and closes at the low on this point. Now my short bias comes back. I'm thinking, okay, I need to find a stock to short. Twitter, that idea comes up. We have the $50 area and the high volume close as a potential entry point. Let's see if earlier on it gives me a potential entry point so I can manage my risk in a couple different places. So with Twitter, it puts in the daily high at 6:37, 9:37 Eastern. Let's look where 9:37 is here, this nice green bar. So on the E-mini futures, we actually run for a couple more minutes higher, while Twitter has already put in its high for the day and is starting to pull back. That's a subtle relative weakness. Okay, this is topping and not pressing higher. Buyers are satisfied. There's no buying demand as it comes back in, while the S&P 500 mini futures, they're pushing higher and they actually peak at 6:43. At 6:43, we see this candle from Twitter. We consolidate a little bit and then we break down after a failed breakout over this three minute area here. And then closing at the low here. So same kind of candle, but instead of putting in a high for Twitter, we actually put in a lower high here. So relative weakness. Now my short bias is coming back now that we get this candle, and we start pressing lower here. and we start pressing lower until we start congesting from 648 to 654, 648 to 54. So same thing. The market, the general market, finds some support a little bit above the intermediate pivot. We bounce, and 654, let's track that area. So that's this candle, this nice green candle, closing kind of midway through, but the highest close in the last couple minutes here. So we're bouncing off the lows there. 654, we are getting off this little consolidation area, but notice where this is much, much lower from the previous high, where the general market is not too far off its previous high. So there's another sign of relative weakness showed by Twitter. This is not getting the buying support, not pushing higher as much as the general market is at this point. So now I'm thinking, okay, let's see if I could start a short position, keep a very tight stop using 51.01, 51.02 as my stop loss. That's about a 1% stop, 1.03% stop. And I took the trade, my short position at 655, right when, let me check my notes, when it broke under here at 50.43. So right at this area is my entry point on this candle. So at this point, we took out the previous candle's low after it tried to rally back up after a small consolidation. And the general market keeps rallying higher and actually puts in a new high for the day at 701. But by 701, Twitter is really is already, let's measure. It's already at 701, nearly 1% down from my entry point. So I'm immediately profitable in the trade, and that's a good thing. Because I was able to keep my stop within 1%, I really sized this up. I put about 1/3 of my total portfolio in as a short position. So if I get stopped out, that's 1% of 1/3 of my portfolio, so 0.33% total risk on the trade. But this immediately starts working out. We break under the $50 area, under the high volume close, which was $49.97. And at this point, I don't want to take a full loss on this, so I'm moving my stop up to the high here, which was high was 50.60. I think I put it at 50.61, or that was my mental stop area. So now I'm not even going to let this run back up to 51 to stop me out. If I'm going to get stopped out, I'm going to get stopped out for even like 0.25%. So my risk is essentially gone at this point. Maybe I get stopped out, that's more likely, or this really turns into a nice winning trade for me. And you can see when this came back through 50 and held that $50 area and then pushed even higher, I did take off 1/8 of the trade for about a 0.6% gain on that. You also see the index, the general market, was making a new high. So because I had such a large position, I wanted to manage it. I wanted to lock in some profit. So I took 1/8 of the position off right when the market was making a new high, and this was pushing higher around 50.12. So took 1/8 off there for a nice 0.6% profit. And at that point, with my stop up here and that profit taken, I have zero risk in the trade. My only risk is I get stopped out, and the money that I could have been making if I took the trade off here is gone. But no initial capital risk. At that point, we see the general market pull back in again. Twitter breaks back under 50, and at that point, it never retests 50. It's a clean break, and we're off to really starting to flush here. You can see a couple other points that I wanted to point out here. We break under the intermediate pivot. We do consolidate, bounce, find some support here, but we eventually break down at 740. And looking at the chart here at 740, we have this candle right here. We're already very far away from our entry point. That's around a 2.6% gain on the short position. I did take a 0.25% off at 714. So let's backtrack a second there. So right in here, as we were rallying up, the market was finding support on this intermediate pivot and pushing higher. So took 1/4 off at 1.4% gain, locking in some profit. Again, it was a larger position for me. So I wanted to lock in profit while I was there. I took off another eighth at 8 o'clock. Let's see, 8 o'clock here. So much further down, locking in 3.8% there. Took off another quarter a little bit later when it was down 4.5%. In my last quarter at 47.71 for a 5.4% gain. So zooming out here, my average that I scaled out of the trade was 48.72. You can see we actually closed under that. So would it have been more profitable to hold the short position the entire day? Sure. But with the amount of size that I put on the trade, I wanted to make sure I was profitable right away, start taking some profits right away, and then manage my risk from there. Knowing that Twitter had just gone through that announcement of Elon taking a large position, and knowing that the general market had been extended to the downside for 2 days and starting to find a bid later on in the day, I just wanted to lock in my profits. It was a really nice trade with a large position size. And you can see we put in a low 46.55 and then rallied pretty much the rest of the day. And then along with the general market, which came back through, overtook the intermediate pivot and actually took out the bolded pivot as well before closing right on that area. So really quick summary, Twitter was up 27%-ish on the highest volume in the last 5 years when Elon announced he started a position. We had a high volume close area to watch at 49.97, right around a $50 area. Twitter couldn't handle over 200-day simple moving average once, twice, and then the third day after the high volume close was my short position. The general market had been weak, so putting pressure on the stock as well. So I came into the day with a short bias. So the general market was pulling back. That was working in my favor for the short, adding probability to the trade. I had a clean entry point right around $50 to look for. If buyers were going to be coming in to support the stock, they were going to support it at $50 at this high volume close. The fact that I got a little bit of a head start at 50.43 just gave me a little bit more cushion to that $51 area where my initial stop loss was. So I got a 1% risk, and I was able to size that up with 1/3 of my total account because I kept my stop loss to 1% total risk. So it was very possible that the stock would have found support at $50 and then immediately took out my stop. Entirely possible, but again, the fact that the general market was weak, this ended up breaking under 50. This was a good risk reward trade, and I took my profits when I could get them because again, looking at the S&P 500, we gapped down the previous day. We were a little bit oversold. We were right in the 20-day EMA and the 200-day simple moving average. So it was entirely possible that we did find buying support today, which is what ended up happening. So I wasn't trying to hold this short position for a long period of time, especially because of how large the news was with Elon. It's entirely possible that tomorrow it just starts taking off again. Then we could use that HVC, the high volume close area, as potentially taking it long. But it really represented itself as a high quality short position. We added a bunch of probability to the trade and managed it correctly. All right, that's gonna be the breakdown of my short trade in Twitter. If you guys enjoyed the video, please leave a like and subscribe to my channel. Have a great weekend, and I'll see you on Sunday for the breakout watch list. Take care.